I often get asked, what's the best way to find stocks to trade? In other words, how do you find that next big winner? Well, in this video, I'm going to show you my absolute favorite pattern to trade, and also a scan that I developed that makes it really easy to find stocks that are in that pattern. So please hit the like and subscribe button, and stick around after the intro. I'm going to show you a scan that's going to make your trading way easier and significantly more profitable. Stay tuned. All right, let's get right to it. So my absolute favorite pattern to trade is a volatility squeeze. I really think that if you're trading volatility squeezes, you're trading the highest probability pattern that you can trade. And not only that, I find that they typically have way better profit, way better risk reward ratios than other patterns that you can trade. So basically what you're looking for is you want to see a stock that's in a nice uptrend, it's been in an uptrend for a while, and then starts to consolidate. So it starts to consolidate, it's trading sideways, and the price action gets really tight. The Bollinger Bands start to squeeze, and then you get this breakout. And the breakout has to happen on an increase in volume. So you have a volatility squeeze with decreasing volume, and then a break above resistance with a pop in volume. That's your entry point, and then you just ride the profits up. So how do you find stocks that are in this type of squeeze? Well, if you're using the ThinkOrSwim platform, there's a really cool feature in there called the TTM Squeeze. It's an indicator that basically tells you stocks that are in this squeeze type pattern. All right, so let me show you how the indicator works first. So if you go to the Studies tab and just type in TTM, select TTM Squeeze, add selected, hit apply, and OK. All right, so here we got the TTM Squeeze. So basically the way you read this indicator is anytime you see a red circle, it means the stock is squeezing. And then after the red circles, when you get a green circle with a volume bar either up or down, that tells you that it's coming out of the squeeze. The bar tells you which direction it's going in and the intensity of that move out of the squeeze. So you can see that if you look at all the different times that it's squeezed, it doesn't always result in a big move up. So in this case it did. Here it had a really long, nice tight squeeze, and once it broke out, had a pretty decent move up. Then it had a much longer consolidation period. Now during this consolidation, there were a couple fake outs where here it showed you that the stock was squeezing and then came out of it, really didn't result in anything. Basically it was just bumping up against resistance. Did it a second time here, same thing, bumping up against resistance. But the third time, the stock squeezed, and this time it broke up above the resistance line on volume, and also gave you an indication on the TTM squeeze. So basically what I'm trying to say is that you don't want to use just the indicator on its own. You always want to rely on price and volume as your main decision factor or your main criteria for getting into a trade. The TTM squeeze indicator is just a way to find stocks that are in that pattern, stocks that you want to watch, and look for that breakout move. Now that being said, I typically don't keep this indicator on my screen. Mainly just because it's one more indicator to watch, and it just kind of clutters up my screen. So what I do instead, well, here, let me just get rid of it here. There we go. So instead of putting it on my screen, because realistically, if you were to use that indicator and kept it up on your chart, you'd have to go through hundreds or thousands of charts trying to find exactly where there's, looking for those red dots, basically looking for the squeeze. It would be incredibly time consuming. So what I do instead is I created a scan that basically tells me all the stocks that are currently in a squeeze. Then I can quickly go through just those charts, look for patterns that I like, set alerts at the breakout levels, and then just wait for those alerts to get triggered. So let me show you how to create this scan. Up along the top, if you click on this tab where it says scan, if you have some scans already, they might show up here. Otherwise, this might be blank. But the way to create a new scan is over on the right side. You click on this menu button, click on Load Scan Query, and then choose this one, Create Scan Query. Now when you do that, this pop-up comes up. I'm just going to name this Test. You can name it whatever you feel is appropriate, and then hit the save button. Then come back up to that same menu, hit load, go under personal, and select the one that you just created. All right, so that brings up a few blank lines here where we can start entering our filters. So the way I like to set this up, the first filter is a stock type filter. And what I like to do is put in a market cap, a minimum market cap of $1 billion. Now, I don't put a maximum, but just the way that I like to trade, I like to trade the large cap stocks. I find they're more reliable in this type of pattern. So that's why I have the $1 billion market cap criteria. Now, these next two lines, we're going to delete those for a minute. So just hit the X down here on the right side for both of those lines. Because the other filters we're going to use are not stock-based, they're study-based. So once you got those deleted, you're going to come up here where it says Add Filter. You're going to click on that and then choose Study. Now, for the first one, we're going to come over to this drop-down and we're going to choose Custom. When you do that, you get this little screen that pops up. You're going to go over to here where it says ThinkScript Editor. And first you're going to delete this item that's in there. Now I'm going to post down in the comment section, I'm going to post this so you'll be able to just copy and paste it. Basically, you want to paste this into here. So what this is saying is that the SqueezeAlert, when the SqueezeAlert reading is red, that's basically a false reading. So what this is saying is that you want to find stocks that are red today and the previous 2 days. So basically, you want to find stocks that have at least 3 red circles indicating 3 consecutive days of a squeeze. So that's the minimum you want to look at. Anything less than that isn't really reliable. Even 3 is kind of on the low end. But I like to use 3 just to get more stocks to look at, and set some of those alerts a little bit earlier. So this will give you stocks that are squeezing for 3 days. So once you got that pasted in there, hit the OK button, and you'll see that shows up right on that second line there. Now, the next one that we're going to create, again, you're going to go on the Add Filter and select Study. And we're going to do one more custom. So hit that Custom button. The menu pops up. Go to the ThinkScript Editor. Remove this item. And again, I'll post this down in the comment section so you can just paste it in here. Just like that. Now, what this one does is it's basically saying that we want our average volume over the last 30 days to be greater than 450,000 shares per day. And again, that's just because I don't like to trade stocks that are too thinly traded. I like to trade stocks that the institutional money is going into. And 450 is even kind of low. You could put that even higher if you like, but I like to use 450,000 just as a starting point for stocks to look at. So once you got that in there, hit the OK button again. And that gets added to our list. All right, so we're going to hit that Add Filter again. Hit Study. Now, this time, I only like to look at stocks that are in uptrends. So the easiest way to define a stock that's in an uptrend is you want the price to be above both the 50 and the 200-day moving averages. So what we're going to do now is we're going to select a study under Popular Studies, and we're going to choose the Moving Average Scan. So for this first one, we're going to select that we want the closing price to be at least 0.1% above the 50 period simple moving average. And if you look here on the right side, this is a daily. So this is basically saying that we want the price to be at least 0.1% above the 50-day moving average. Now you can make this number higher if you want. I use 0.1 because I'm okay with the stock being at the 50-day moving average. I just don't want it to be below. So we're going to do the exact same thing now for the 200-day moving average. So we're going to come over here again, select Popular Studies, Moving Average Scan. This time I use 0.5%. And the only reason I do that is that helps to make sure that the 50-day is above the 200-day. Just because you got 0.1 there and 0.5 for the 200. So we want the close to be 0.5% above the 200-day simple moving average. All right. And one last one, we're going to hit that add filter again and go to study. And this time you're going to come down to price performance and you're going to select near highs or lows. Now, because we're trading stocks that are in an uptrend, we want to see stocks that are near their 52-week high. And when I say near, at least reasonably close to. So what I put in here is that I want to see the current price to be at least 25% of the 52-week high. So to get 52 weeks, we're going to have to change this daily over to a week. And now we got our last criteria is that the price has to be within 25% of the 52-week high. And that's it. That's how you set up the scan. So now you just go back to this menu, hit the Save Scan Query. Your query name will come up. Just hit Save. Do you want to replace it? Hit Yes. Okay. And there you go. Now, to test it out, all you got to do is hit this green scan button. And it just takes a minute to populate. And there we go. So basically, it's showing you every stock that meets this criteria. Now, the really nice thing about this is if you go back to the charts and over in your watch lists, if you select the one that we just created, so you go under personal and I'll pick test. And again, it's just going to take a second to populate. And there it is. So now it's going to show you every stock that meets that criteria. And now you can really quickly just go through them all and see if there's anything there that you want to put alerts on. So for example, this one, not a very tight pattern, not a very clean pattern. So I'd probably pass on that one. This one, on the other hand, does look pretty good. Actually, you can see I have an alert on there already at 883. Clear resistance line. So we'd be looking for a break above that level on volume. Nothing really there. And this one looks pretty good. So here we can, let's see if we can draw a trend line. Looks like it's gonna, yep, actually lines up perfectly. So we can see we got a downward sloping trend line. So we got resistance, 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 resistance. So what you want to do for something like this is basically set your alert right above that trend line. So we'd go create an alert at 6011, create. And basically you want to watch and see if that stock breaks above that level with an increase in volume. And that would be your entry. It's that simple. Now, one last thing I want to show you. So the scan that we created, remember, it was basically saying that we want to see a squeeze for a minimum of 3 days. Now, if you want to change that to whatever variation you're comfortable with, I'll show you how to do that. Basically, I have 3 that I use. So I use the 3-day TTM Squeeze, which is basically identical to the test that we just created. I also have one that has all the exact same identical conditions, except it's a 6-day TTM Squeeze. So basically it requires 6 red dots in a row. And then I have one it's a 5-day TTM Squeeze with the current day being a breakout. Now, it's not my favorite, and I'll show you why. I do look at this one every once in a while, but I'll show you one issue with this one. Again, it's just going to take a second here to populate. All right, there it goes. So the issue I have with this one is that by the time you see it, it's usually too late. So like for example, on this one, obviously you can see here, it wasn't a squeeze. If we brought up the TTM indicator, we'd see that there's a bunch of red dots. By the time you get the trigger alert that it broke out, it's already quite high. Now you're kind of chasing the stock. Let's take a look at the next one. Yeah, see, we got pretty much the same thing here. Nothing to see there. And Starbucks, yeah, same thing. So by the time you're getting the alert that the breakout has happened, the stock's already run up too high. So I'll look at this one occasionally, but honestly, it's not my favorite. The ones that I really rely on are the 3-day and the 6-day. And I can just show you real quick in here on how those are set up. So if we load, let's start with the 6-day. So again, you can see all the criteria exactly identical. Everything from the market cap at $1 billion, the average volume over 30 days, 450,000. The close 0.1% above the 50, 0.5% above the 200, and 25% within the 52-week high. So all that's identical. The only difference is this one custom entry here, where if you click on this one, you'll now see, instead of having the current day and the prior 2 days, we now have the current day is false and the prior 5 bars are also false. That's how we get our 6 red bars. So that's the only difference in that indicator. And I can also show you real quick the TTM Squeeze Breakout. The way you set that one up, again, all the indicators are identical except for this one line. When you look at this one, now what you do here is you put the previous 5 bars are all false, but you put today's bar as true. So what that does is it gives you 5 red circles, or 5 days of squeeze, with a green circle for today. And that's how it sets up the breakout. So if we go back to the charts again, obviously if you use the 6-day squeeze, you're going to see less stocks than the 3-day. So if you go to the 6-day, the thing about it is that it's going to be more reliable, because now you have a squeeze that's lasted 6 days. And if you can catch that breakout, it's probably going to run a lot farther, but you're going to have a lot fewer stocks to look at. So I'll use the 6-day usually, and then every once in a while I'll take a look at the 3-day just to get some advanced warning or advanced notice of stocks that are starting to squeeze. So that's how I set up my scan. Again, you can do any variation of this that you're comfortable with, but hopefully this helps you understand the pattern that I trade and how to set up the scan in ThinkOrSwim. So if you enjoyed this video, please hit the like and subscribe buttons, and we'll see you next time.